In the quiet growth of a forest, there is a hidden language of wealth that most people spend their entire lives failing to translate. We look at the towering canopy and see only the height, but we forget that every massive trunk began as a single seed, protected by the right environment and nurtured by the patience of time. Warren Buffett is often regarded as the greatest investor to ever live. If you had placed just $1,000 into Berkshire Hathaway when he first took the reins, you would be sitting on over $21 million today. Even with the recent market fluctuations, this represents an average annual return of around 20%, which consistently doubles the 10% average return of the S&P 500. This is not the result of chasing trends or following the erratic pulse of the stock market. It is the result of a philosophy that views capital not as paper but as a living organism. To understand how one man outperformed the entire market for decades, we must look past the numbers and into the fundamental laws of nature and finance. The first law of the Oracle of Omaha is that cash is never a good investment. It is a startling claim for a man who often keeps billions in reserve, but Buffett views cash like oxygen. You need it to breathe. You need it to survive the unexpected, but you do not win a race by holding your breath. Cash is a wasting asset. It is a guarantee of lost value over time because of the silent erosion of inflation. Buffett famously said that while people claimed cash was king during market volatility, they were chasing a crown of melting ice. Cash produces nothing. It sits idle while the world around it moves forward. His philosophy is simple: get out of cash and get into assets. The dollar you hold today is mathematically certain to be worth less in 10, 20, or 30 years. Unless that cash is deployed into something that grows, it is not an investment. It is a slow leak in your financial bucket. Buffett is only happy when he can put that cash to work in good businesses, because he knows that over the long term, paper money loses its strength while ownership in production gains it. Think about the forest again. A tree does not store all its energy in dead leaves on the ground. It reinvests that energy into the trunk, the branches, and the root system. This is the commitment to productive assets. Imagine you owned all the gold in the world. You could smelt it into a cube 68 feet on each side. You could climb a ladder to the top and proclaim yourself the ruler of the world. You could polish it. You can stare at it. But it will never do anything. It will never produce a single ounce of more gold. When you buy non-productive assets like gold or digital currencies, you are simply betting on the hope that someone else a year from now or 5 years from now will be more afraid or more greedy than you were. You are betting on the psychology of others rather than the output of the asset itself. Buffett chooses a different path. He buys the metaphorical farm. He buys the farm because he expects the corn and the soybeans to grow every year. He calculates value based on what the asset delivers to the owner over time. If you buy a farm or a business and you understand its production capacity, you should not care if the stock exchange closes for 5 years. You are focused on the harvest, not the noise of the crowd. To succeed in this level of investing, you must have the discipline to stay within your circle of competence. This is perhaps the most important boundary any professional can draw. It does not matter how large your circle is. What matters is how clearly you define the perimeter. You do not have to be an expert on everything. You only need to be an expert on the few things you choose to touch. Tom Watson, the founder of IBM, famously said he was not a genius, but he was smart in spots, and he stayed in those spots. The world is full of people who get creamed because they saw their neighbor making money in a sector they did not understand. They let excitement override their expertise. In the forest of finance, the trees that stand the longest are those that know exactly where their roots belong and refuse to overextend into thin air. If you stick to what you truly understand, you eliminate the vast majority of risks that destroy other investors. Before you ever look at a stock price, you must evaluate the company first. This is Buffett's fourth rule, and it requires a complete reversal of how the average person thinks. Most people see a price drop and feel fear, or see a price rise and feel greed. Buffett ignores the price entirely at the start. He sits in his office and reads annual reports. He looks at oil reserves. He analyzes refining capabilities and chemical outputs. He determines what the business is worth in a vacuum. He asks himself what he would pay for the entire company if he were buying it privately. Only after he has a firm number in his mind does he look at the market price. If the company is worth $100 billion and the market is selling it for $35 billion, he buys. If you look at the price first, you are already biased. You are letting the market tell you what to think instead of thinking for yourself. You must value the business as a business, not as a piece of paper that wiggles on a screen. When the right opportunity finally arrives, you must be prepared to play big. Buffett believes that most people fail because they dabble. They waste their energy on 500 mediocre decisions instead of focusing on 5 great ones. He tells students to imagine they have a punch card with only 20 slots for their entire life. Every financial decision uses up a punch. If you knew you only had 20 moves to make, you would think with incredible depth before each one. You would ignore the cocktail party tips. You would ignore the easy clicks of online trading. Finally, the most important investment you will ever make is not in a stock or a farm. It is in yourself. Your talent is the only asset that cannot be taxed, stolen, or inflated away. Buffett views an individual as $1 million asset. If you can improve your ability to communicate or your ability to lead, you can increase your personal value by 50% instantly. That is an extra $500,000 of value created out of thin air. Build a moat around yourself, develop habits of integrity and generosity. Look at the people you admire and write down the traits that make them successful. Are they friendly? Do they give credit to others? Are they honest? These are choices. You can choose to be the person that others want to do business with. By refining your character and your skills, you become a productive asset that produces dividends for a lifetime. Success is not a secret. It is a set of principles applied with unwavering discipline. It is about understanding that while the world is obsessed with the fast and the flashy, the true power lies in the steady and the productive. As we walk through the landscape of our careers and our financial lives, we should remember the trees. They do not hurry yet. Everything is accomplished. They grow deep before they grow high. They turn sunlight into wood. They survive the storms because they are rooted in something solid. Your financial future depends on your ability to do the same. Stop holding on to melting ice. Start planting seeds in ground you understand. And when the harvest comes, you will find that wealth is not something you chase. It is something you grow.